welcome to Insider Financial Talk Stocks. My name is Alex Carlson. I am the editor-in-chief of InsiderFinancial.com, and in this video, we will recap today's market action and discuss our game plan for tomorrow. But first up, to get our market-moving reports on top small caps, click that link in the description or go to signup.insiderfinancial.com or sign up with your email on any of the pop-ups on insiderfinancial.com. After you sign up with your email, you can then sign up with your mobile number. Mobile is the fastest way to get our reports, and it works for all numbers worldwide. Simply enter your country code first, followed by your number. For US and Canada, be 1 plus area code and number. Never begin the format with 0. It will not work. And after you sign up, you will get a welcome email, which includes a free copy of the Insider Financial Guide to Penny Stocks ebook. Our ebook, our email service, and our text messaging service are all free service from InsiderFinancial.com. We do not run any paid subscription service, no Discord rooms or Telegram chat groups. Well, guys, I said in my last video that I was being cautious with my trades as I felt many names had simply just gotten overextended to the upside. And today we saw profit taking across the board in SPY, QQQ, Tesla, Netflix, Carvana, Coinbase, AI, UPST, and more. Puts were printing money today. Congrats to all who watched my last video and either booked profits or put on some puts or sold calls. The catalyst for today's market move lower were Tesla and Netflix earnings. Both weren't bad reports. I think Musk's conference call did more to scare the bulls than anything. He said, one day it seems like the world economy is falling apart. Next day it's fine. I don't know what the hell is going on. Musk told analysts on the conference call, we're in, I would call it, turbulent times. I agree with Musk in his thoughts. Just not often that you hear a CEO be as direct. I think I appreciate that. That's why I am a big Elon Musk fan. But there were some bright spots today in the market. Spacs are starting to heat up again. First up is PSQH, closed up 114%. This is Patriotic Marketplace. Public Square started trading today under the symbols PSQU and PSQHWS for the warrants. The company is a leading marketplace of patriotic businesses and consumers. It was a successful completion of the business combination with Public Square and Colombier Acquisition Corp. It says here they did the opening bell at the New York Stock Exchange, and Jim Cramer was not happy. There's a lot of stuff on Twitter. His reaction when they were doing USA. You could tell that Jim Cramer isn't used to hearing USA chants on the NYSE floor. The inverse Kramer here. This is a parody. I don't support Tucker or Public Square. They will never succeed. Shorting PSQH here, going to 0. It says here, the platform's only been live nationally for 11 months, and we already have 1.1 million registered users. That speed of growth is faster than Twitter, Airbnb, or Spotify. Don Jr. was there today. He put the tweet here. I invested in Public Square shortly after I met Michael's the CEO. 12 months later, we are at the New York Stock Exchange ringing the opening bell. It's an honor to be in the fight against woke America with great people like Michael, Nick Ayers, and Real Malik. So again, certainly a lot of excitement here on this one, and that is also spilling into DWAC, which is there's optimism that the deal with Trump's Truth Social will close after the Spac settled with the SEC. We got the announcement here. The settled fraud charges against the Spac related to material misrepresentations made to investors. The SEC and DWAC reached terms of an $18 million penalty if the merger closes and a cease and desist order. So again, when you see PSQH rallying like this, Don Jr.'s involved, I think there's incentive on Trump's part to close this deal with DWAC, so it's trading higher in the after hours. I think this certainly has a lot of room to run. A lot of shorts in DWAC been betting against that the deal would not happen, but it seems that there is now optimism that with the settlement with the SEC, the company can move forward. There was also criminal charges against some investors in DWAC, but that does not involve Trump's Truth Social or the company itself. So again, I think a lot of things are getting cleared up. Let's see if they can get this deal closed. And the other thing that's about PSQH is just their ad deal with Tucker Carlson's Twitter show days before they signed that deal, before trading. And Tucker Carlson is just he has a huge presence. The new host, Jesse Waters, he got Tucker's old slot at 8 p.m. He cannot come up with the same ratings as Tucker. Tucker is a ratings juggernaut. I'm not going to get into the politics whether you agree or not. The bottom line is, at the end of the day, can you make money trading around it or not? And I think with PSQH you can. PMGM up 41% today. Nice action here. They are merging with Aon Biopharma. What's really exciting about this is that there is just a 300,000 share float. So that is why this one is running. And I think we're going to see a lot more squeezes in PMGM. We could easily test the 1468 high last month. So keep this one on your radar screen for tomorrow and into next week. PMGM, especially once the deal closes, can see more follow through. GFAI, this one has just a 6 million share float. 11% of that float is short. We got a PR today. The company GuardForce AI partners with Concord Security to launch a new robotic security solution in Singapore. But what I like about this is the trend line, the major support right here at $5. It looks to have finally put in a bottom. Remember, guys, this one earlier this year was trading above $35. We're here at $6.44. This one could easily make a move higher, so keep this one on your radar screen for tomorrow. Next up is SIRI. Sirius XM blasting higher, up 42% today. 34% of the float is short, so we're seeing a lot of short squeeze action in Sirius XM. But another factor driving up Sirius XM stock is investors unwinding a trade in which they were long Liberty Sirius XM Group, LSXMA. This is a tracking stock created by Liberty Media that owns about 83% of the company's stock, and they were short Sirius XM stock. That spread trade has been popular with hedge funds, which are among the largest holders of the Liberty tracking stock, because the tracker has traded at a roughly 35% discount to the value of its assets in June, similar to the discount over much of the past year. Its assets largely consisted of 3.2 billion shares of Sirius XM stock. Its other asset is a roughly 30% stake in Live Nation. This trade looks even more attractive after Liberty Media recently approved a move to separate the Liberty Sirius XM tracking stock into two tracking stocks that will take effect in early August, one tracking Sirius XM and the other tracking Live Nation. Some investors piled into the Liberty Sirius XM tracking stock ahead of that move, banking that the simplification would result in a narrower spread relative to Sirius stock, but the opposite has happened in a big way. The spread between Sirius and Liberty Sirius has now blown out to about 55%, with the value of Liberty Sirius XM stake in Sirius XM and Live Nation approaching $80 per Liberty Sirius XM share. With the trade going badly, hedge funds may have hit the self-imposed drawdown limits on their positions and could be unwinding them if they lost too much money on a mark-to-market basis. So similar to what happened in GameStop, we are seeing an epic squeeze in SIRI. Another rumored factor behind the run-up is Sirius XM is the rebalancing of the Nasdaq 100. That is happening tomorrow to reduce the weighting of its largest components. That may result in the buying of about 15 million shares of Sirius by the QQQ. It says here, Barron's has not been able to confirm this yet, so certainly that could be another factor. And as I said, with hedge funds on the wrong side of this trade, the squeeze could be epic. Keep tuning in, guys, and keep this one on your radar screen. Play the momentum. Next up is EVLO, closed up 52%. A co-founder of the vaccine maker Moderna recently bought up more shares. Affiliates of Flagship Pioneering. This is an investment vehicle helmed by Nubar Afian. He is a co-founder of Moderna, and its chairman paid $12.5 million on July 11th for 5.4 million more EVLO shares at $2.31 each. Flagship now has overall ownership of 6.5 million shares. The purchase was made through a private placement with EVLO, in which the company sells the shares and receives the proceeds. Flagship led the buying in the private placement, which totaled 11 million shares at $2.31 each. The company received gross proceeds of about $25.5 million and will use them to fund the ongoing Phase 2A trial of EDP 2939 in moderate psoriasis, and also to pay down $5 million of debt and for general corporate purposes. EVLO is developing a novel platform of orally delivered inflammation resolving medicines acting on the small intestinal axis. So, and again, anything orally, pill form is much easier for patients to take. EVLO says its medicines have the potential to address inflammatory diseases and cancer. As of March 31st, the company had, this was before the private placements, had cash and cash equivalents of $27.5 million, enough to fund planned operating expenses and capital expenditures. Guys, remember, the IPO was in May 2018 and priced shares at $16 each, or $320 when adjusted for a 20-for-1 reverse split that was effective on June 30th. The company used the reverse split to remain compliant with the Nasdaq. And before this year, the stock has been a high flyer, hitting a record intraday high of $398.56 in January 2021. That year, EVLO had COVID-19 therapies and trials. Since then, shares have tumbled as candidates haven't panned out. But for the Moderna co-founder to be stepping up like this is very, very significant. He remains the company's largest shareholder. Before the private placement, they had a 45% stake in the company. So again, he's doubling down. Deep pockets, Moderna co-founder. He knows the biotech space. This one could really, really keep running. So put this one on your radar screen going forward. Lastly, guys, is FNGR, finger motion. Guest contributor Mike Long is out with an article on InsiderFinancial.com. It says here, Chinese AI company wading through the FNGU FUD from Seeking Alpha. There was a short and distort report on Seeking Alpha that contributed to the sell-off on the stock in the last few days. This is a rebuttal to that. I highly, highly recommend you go and read the article on FNGR on InsiderFinancial.com. It's all right there for you. He says here, his analysis delves into the seldom read disclosure risk in the latest quarterly report to make the case for his sell rating. He made the inconceivable and preposterous case that FNGR might actually get kicked out of China. This article will explain the real facts and smother any notion that FNGR is a regulatory target of Chinese regulators. So definitely worth taking a read at this article. We've been all over FNGR. We covered it last year before the spike to 980. We've been covering it last month. You can go into the magnifying glass, type in any symbol, type in FNGR, and you can see what we've had to say about any particular name, and it's all right there. There's just been a lot of coverage on FNGR here on InsiderFinancial.com, and it's been a big winner for our subscribers. But we are going to be wrapping up the week tomorrow. We'll be doing all weekend. We're going to be researching companies for our subscribers to get our small cap reports. We cover low floats, short squeezes, recent IPOs, biotech FDA plays, and AI stocks, and also EV stocks. Click that link in the description or go to signup.insiderfinancial.com or sign up on any of the pop-ups on insiderfinancial.com. No spam, your info is never shared. Unsubscribe anytime. You can even sign up just to see the level of research we do here at insiderfinancial.com and unsubscribe. Finally, Insider Financial and I are not investment advisors. This video does not provide investment advice. Always do your research, make your own investment decisions, or consult with your nearest financial advisor. This video is not a solicitation or recommendation to buy, sell, or hold securities. This video is our opinion, is meant for informational and educational purposes only, and does not provide investment advice. Past performance is not indicative of future performance. Thanks for watching. Remember to smash that like button, hit the notification bell to be notified when a new video is uploaded. Good luck tomorrow. Bye-bye, guys.